episode of We are here today with Melissa Pyatak from CRV Insurance.
Hello.
And we are going to talk about all different insurance related topics from housing, car, gap, even other things that I didn't even know were insurable. So I think you're going to learn a lot today. And let me tell you that she is way better than Flo and so much better than that lizard. And so we are so happy to have Melissa here. So welcome. Thanks for taking time.
Thank you so much for having me.
You're welcome.
Happy to be here. So I thought it'd be kind of fun just to start out by saying, you know, what is the definition of insurance? Well, it's really the transfer of risk from one party to another. Okay, so if you think about it, when you get insurance, whether it's homeowner's insurance or car insurance, any form of insurance, tangible product, right? And some policy. So the idea behind insurance is it's really in the event of an unforeseeable accident. Okay, so if you are in a car accident, it's something that's totally out of your control, it's unforeseeable, and that's what insurance is designed for. So the same goes for homeowners insurance, business insurance, any form of insurance. It's there to protect you in the event of an unforeseeable accident. So oftentimes we get calls for, someone will call and say, oh, my furnace died and I need to get a new furnace. Well, if your furnace is 22 years old, you should have replaced it years ago, right?
Okay.
That's a foreseeable occurrence. Insurance is not designed to kick in for something you could have prevented on your own. Does that make sense?
Okay. Say
No.
if it went out.
No. If let's say a pipe burst in the walls of your home, causing water damage. Now that's an unforeseeable thing. It was an accident, and there was nothing you could have done. Is for accidents. It's for foreseeable. It's not a maintenance policy. So similar to a car. Let's say you buy a used car. Okay? And you drive the car, and a week later, it's a used car, a week later, you blow a head gasket. And the car, you take it into the shop, and the mechanic tells you it's going to cost more to repair this vehicle than the vehicle is even worth. Do you think insurance is designed to pay out in that circumstance? No. The answer
But
would be
they
no.
don't give you the value of your car.
And again, it kind of goes, no, I'm getting swamped up here. That it wasn't an accident. It was
Negligence.
wear and tear.
Oh.
It's wear and tear.
Okay.
You know, it's your responsibility to upkeep your property. And your property could be your home, could be your cars, it could be your business, it could be anything.
Back to a pipe burst, something breaks, and it's found that it was through not being maintained. Then is that not covered, or because I think those are the bigger issues with insurance, and I know we're jumping around a little bit, but what am I paying for? What gets covered? And games, and I think that's what people try to understand.
It is, and unfortunately, there's not really a black and white answer to that question. I mean, I hate to say this. Each case is going to be somewhat unique. It's really going to come down to what caused the damage. Okay, so was it truly an accident? Car insurance right now, and this
People
is really
are saying
important.
they can hear you.
Okay, in the state of North Carolina, there's what's called state minimum limits. Essentially what that means is in order to drive around on the streets legally, you have to maintain a certain minimum level of coverage. So specifically, I want to talk about the property damage limit of $25,000. You have to have a minimum of $25,000 in coverage. The most people simply don't know any better, so they're buying state minimum limits because they're thinking, I'm just getting the insurance because I have to have it. This is the minimum that they're telling me to have. I don't want to overpay, so just give me that. Well, let me ask you a question, Diane. Let's imagine for just a minute that you're involved in a bad car accident, okay? And let's imagine you rear end somebody driving in a brand new SUV. Let's just say it's give me an SUV, a brand, a car, any SUV.
Toyota, it doesn't.
A Toyota,
Sequoia.
Toyota 4Runner,
Yeah.
whatever.
Mhm.
How much do you think a brand new 2021 Toyota
40,
4Runner,
50?
40 or
Yeah.
50,000? I just told you that state minimum limits gives you $25,000 max for property damage. So if you rear end somebody and you total their brand new Toyota 4Runner, your insurance policy, $25,000, not a dime more.
Uh-huh.
That person that's now without a vehicle that you destroyed
It's gonna come after you.
is going to come after you. They want a new car. So the insurance is going to cut a check for $25,000 and the rest is on you. And if you don't have that money sitting in your bank account, they're going to sue you.
Mhm.
That's the reality. That's the world that we live in today, right?
Right.
So they're going to come after your assets. Your assets are what?
House,
Your home, your savings, your 401k. So it is extremely important, first of all, that nobody buy state minimum limits for car insurance. I don't care who you are. I don't care if you're driving around in a beat up car worth $500. It doesn't matter. Nobody should be driving around with state minimum limits. And the sad reality is most people have no clue have that, and then they're shocked to learn. If you are a homeowner, it's extremely important that you have an insurance professional review your policies to make sure that you have an appropriate amount of coverage.
Okay.
So
So that's car.
that's car, but you know, what I would recommend if you're a homeowner that you carry at the very minimum $100,000 for property damage, where I just mentioned the state minimum limits are $25,000. I would recommend at minimum you have $100,000 for property damage, and you change your policy from the state minimum of $25,000 and to increase it to what I'm suggesting of $100,000, pay less than $100 a year
For that change.
for that change.
Now, I got some people who aren't in North Carolina with these minimums and,
It is.
and the things.
It is.
But still is the guidance that
And that's my suggestion for bare bones minimum. You know, then there's a whole nother, all right, let's say you're a family and you own a home valued at $500,000 or more. Let's say you maybe have teenage drivers, maybe you have money stocked away in 401k savings. I would change my recommendation for what you carry in coverage, but I'm just giving you kind of the bare bones minimum right now.
okay. So is that's car just related?
That's just car.
Not your home and all. And then home insurance is a different thing.
It's a different thing. So,
And what is the average cost for home insurance? I'm sure it depends on size of home and cost of the home, right? I mean,
it does. So, if I had to throw out an average number for homeowners insurance, I would probably say, at least in this area, maybe $1,000 to $1,500 a year
Okay.
is probably the average.
Okay.
But let's take that to the next level and talk about what things around the home or pertaining to the home might increase your rate. So I'll quiz you. I'm going to throw some curveballs at you, Diane.
Okay. Well, see if our audience might know any answers. Let's throw a question out. All right, here's a quiz. Let's see if you know.
I know, got the smoke over here.
Sorry, our fire's smoked out.
Let's imagine we have two houses that are essentially identical. When I say identical, I mean they're on the same street, they're the same size, same number of bedrooms, same number of bathrooms. They're basically identical homes.
Okay.
But one was built in, let's say, 1940.
Okay.
And the other one was built in 2020.
Okay.
Which one is going to be more expensive to insure? Same house, same street, same size.
Our viewing
same
audience,
thing.
what do you think? Which one is more expensive to insure? The older home in 1940 or the newer one in 2020? What do you think?
What do you think?
Take your guess.
What do you think and why? Use a little bit of common sense too here. Think about it. Same house, same street, same everything. One's old, one's new. Well, here's the answer.
I'm curious.
The newer
Oh,
home.
someone said the older.
The older home is.
So the older? Everyone's saying older.
Okay, great.
Older home is the one that would be more
expensive
to insure. That's the answer.
Good job, audience.
It was
Thumbs
smart.
up. Comment. Tell me where you're commenting from, where you're sitting, what couch are you on right now? Correct answer. Older home. It's really kind of common sense, right? I mean, an older house, like think about it. The roof on the house is older.
Okay.
The plumbing's older. The wiring's older.
Right.
Everything's older. When a house gets old, things go wrong, right? Things break.
Kind of like things start going wrong. Your health insurance costs more too.
Can anybody that comment throw out an idea? What other things can you think of that might increase your rate when it comes to homeowners insurance? Okay, so get a little creative. Think about why would of tips or clues. Let's talk about dogs. Do you have a dog?
Ooh, trampoline, someone said.
Yes.
Location of water.
Yes. Yeah, proximity to water. Dogs, trampolines.
Pools. Okay.
What kind of wiring? Do you have a wood stove? Do you have a pellet stove? It's all about hazards, you guys. Actually cause harm to people.
Okay.
Right?
Mm-hmm.
So, on the dogs, just for a second. Let's look at the golden retriever, the all-American dog. No problem, right? Is a dog gonna hurt somebody? Is a golden retriever gonna bite somebody? I mean, maybe, probably not.
But a pit bull.
Right? But a pit bull, a Rottweiler, a Doberman, right?
So breed of dog will affect your insurance and your costs? Oh,
yes.
okay.
So a lot of insurance companies have what we call in the industry a naughty dog list. and they'll ask the question,
What kind
do
of
you
dog
have
you
a
have?
dog? How many dogs do you have? What's
What kind
the
of dog?
breed?
Okay.
And if you answer the question and you have one of you
Wow.
insurance
At all? For even your home?
At all. On your home.
Wow.
Yep.
Like, what about other things like that? What does it do for your insurance? Gotta let them know
Trampolines,
about
just
it,
for a minute.
or-
So, yes, trampolines are a hazard. People, kids, trip, fall, break bones, they get injured. It's really a kind of a major hazard, but they're very popular too. Many companies will, so an unnetted trampoline is going to be a big no-no.
Okay. Pools, obviously, having gates and...
Pools have to be fenced. They have to have a locking gate. Then there's a whole nother question of, is there a diving board? Is there a slide? Those are hazards on top of hazards. Okay, so there's that. A skateboard ramp. I'm an insurance nerd, so I drive through a neighborhood and
you're like,
I look at houses in a different way.
hey, you got a
I'm
hazard
like,
here.
oh my God, they have a trampoline, unnetted. They have a half ramp skate, one of those skateboard
goodness.
half ramps, and it gets a tree fort. So I'm like, oh my God, this is an insurance nightmare. I'm dying to know who writes their insurance.
Who's writing their policy? They pay
Because
a lot.
they have like XXXXX on that house.
Oh my goodness.
It's too funny.
That is funny. Okay.
Are we still doing good on sound? Can somebody give us a comment? Can you hear us all right?
I keep losing the feed from your phone, so I don't know how to get back. Oh yeah. Okay. Yeah, so we're good. So they still hear us. So it's all about risk. It's all about what you have in and around. It's about age of home. It's about the materials of the home. It's about the things you have in and around your home.
Yeah.
All those things are going to be taken into consideration, and then insurance and cost is going to be
A factor. So there's cost. So let's talk about what can I do to get a lower rate. Insurance right now, what can I do to lower the rate? So if you're watching, throw us a comment and tell me what could you do maybe to lower the cost of your homeowner's insurance. I'm going to give you a hint.
bundling. Someone
Someone
said.
said bundling. Good. Bundling, yeah. What about an alarm system? Do you think an alarm system would help or hurt? When I say centrally monitored, Diane, the homeowner,
You're talking about-
checking your
You're
phone.
talking like a CSI, like
a third party.
Yeah, like
a third party. Yeah. So like a CSI, a CPI,
CPI. CSI.
any third
Okay.
party. Yep. There's an idea. So we have that.
Okay.
It's really just kind of eliminating the risk.
Yeah, it's mitigating and eliminating when
Yeah.
you can. People get ready for a home on the market. There's a lot of things you're looking at that are just getting your home properly ready, and
Yeah.
so that it's in its best condition. But you're going to have people on your property.
And
I'd like to know, actually.
so on your homeowner's insurance, there's something called personal liability. And I'll protect the homeowner for things like a trip and fall. If the Amazon delivery guy shows up and he's delivering a package,
Okay.
and you put out some fun for 4 hours.
People got sick?
I don't know. I'm just giving you
Really?
some random ideas. Food poisoning.
Oh, wow.
You have a party. It could be alcohol poisoning. It could be. You're not getting invited to the next
not
party.
invited to the next party. Interesting.
This is a good segue to go into umbrella coverage.
I have like 3 or 4 years.
Okay. Let me ask you
You're
this.
still there.
If anyone's still with us, if you had to make a umbrella, do you think it's insurance that you buy to protect you or your home from rain, right? I mean, isn't that what an umbrella is? Like, that's not what it is. It's liability coverage, and umbrella is open over your whole lifestyle. Your home, your cars, your motorcycle, your boat, your investment properties. It's covering you and everything that encompasses you.
Okay.
That's what umbrella insurance is. So people will think, okay, that's fine, but I don't need that. Well, maybe you do, maybe you don't. It kind of depends. So the umbrella is designed to give you coverage above and beyond what you're getting already. So when I say already, you already have car insurance. You already have homeowner's insurance. Do you really need more insurance? Well, but that's what an umbrella does, is it gives you that extra. And the most common occurrence when we see an umbrella policy actually responding, actually being necessary, unfortunately, is with car accidents. Okay, so teenage drivers, let's talk about that just for a minute. Teenage drivers are a very high risk level. And I'm just talking statistics. A teenage driver is almost 90% likely to be involved in an accident. It could be a minor accident, it can be a major accident. But the statistics are totally against you.
It just makes me sick.
They just are. So let me tell you this, talking about statistics. Here's the scary truth. When you add a teenage driver to an existing car insurance policy, on average, your rate will double.
30 to 15.
As of today, it's you and your husband with 2 clean driving record for the most part. Yeah, so let's assume you're kind of the average, good, clean driving record, husband, wife, 2 cars, very basic. You might be paying $1,200.
Yeah, it sounds like that. That sounds
yeah. Well, when your son, Leroy, license, and you go out and buy him an old 2010 Subaru to go drive around in, be prepared to see a rate increase of approximately double what you're currently paying. That's just the industry standard.
Wow. Okay.
Yeah.
Yeah, it's been a long time.
So I'm sorry, that was a sidetrack
No.
to the original question
Umbrella.
of the umbrella.
Okay.
And why do we need an umbrella? Well, your son Leroy, that I was just, mom and dad went out of town, and they decided to go have a couple of beers in a field somewhere.
17!
Yeah, and they get behind the wheel, and they're, incapable of operating a vehicle. They're in an accident, and right? All joking aside, it becomes serious quick, and you're gonna get sued. Right? It's gonna happen.
Yeah.
So that, whatever it is, coming for you. Do you understand? And they're not going to sue you for $100,000. They're going to sue you for $1 million or more. That's the society that we live in today. And that's when an umbrella policy is going to save the day. Because you're going to pay an umbrella policy, on average, is going to be maybe $300 to $500 a year. So we're saying like $300 to $500 a year.
That's it? To be covered up to millions of dollars. Extra insurance on top of what you've got, and it covers all off of what you already have. It's just...
Yep. So a lot of people ask me the question.
I don't think we have that.
When I say, the real answer is everybody should have one. But if you really want to narrow it down, who really should? Yes. If you own rental properties, yes. If you're into toys, like recreational vehicles, motorcycles, snowmobiles, boats, yes. I'm sure I'm leaving some things out. If you have a trampoline, yes. If you're entertainers, we are big entertainers. We love to throw parties.
So do we.
Love to entertain. We
we're-
have a lot of people coming
We
and
do
going in
too.
our home, and some of them I know near and dear, and some that come through.
Get some umbrella insurance. I've never even heard of this, honestly.
Yes. Hopefully that's helpful.
So someone said, never heard of umbrella for cars. Didn't know about that. But they're glad they survived 5 teenage drivers.
They have 5 teenage drivers?
That'd be my sister.
That would be an expensive car insurance.
5 kids, they were all close in age. Yeah. All right. So what else? We've covered...
I think we covered a lot of the basics.
Yeah, we covered the basics on insurance. What it really is. It's a risk mitigator. You got to look at what risk you have. If it's negligent, sounds like, the reason things don't get covered, or when you're thinking, too bad, so sad, probably should have
Correct.
taken care of that.
Not a maintenance
If
policy.
it's something that is not of your fault, it sounds like it's covered.
Typically, yes.
But storms, we did not talk about storms, and many of us up and down this don't end up covering their issues, and everybody gets very upset about that.
Yeah, so if you're not quite sure if you have coverage for something or can oftentimes be excluded to your surprise would be storms, so hurricanes and flooding. Those are kind of the big ones, all right? So,
And that's always the argument, because the hurricane causes the flood.
right. So natural flooding is never going to be covered under a traditional homeowner's policy. You would have to have a separate policy for flood coverage to be protected there.
So when people don't get covered, it's because they didn't have flood insurance, or there's some things with flood insurance that aren't even covered in these.
No, it's generally they didn't purchase the separate flood insurance policy altogether.
So if there's a hurricane and a storm and my roof gets a
right.
so I don't have flood insurance. That's what you're saying. Then I'm not going to be covered from the rain that came through my roof.
Depends, Mitch. Where did it come in from? In that example that you just gave, you should have coverage for that. But what's more important, comment, let me know, do you know what a deductible is? Let me know, what do you think is the standard, the normal? People have to say about that. And
I can't see the comments, so I don't know where they went. We have 5 viewers, but I can't see.
so let's talk about a deductible for a second. A deductible, and I'm not trying to dummy this down, but it's the amount of money that you pay out of your own pocket in the event that you actually have to use your insurance, right?
Okay.
So let's just say you experience, you have a window in your home, and the windowsill, the trim is all rotted out, and it's a really, a storm comes through, and we have that like sideways driving rain, and you get some water come through one of your faulty windows, and it damages sheetrock or flooring or furniture. You're going to have coverage for that, but you're going to pay the out-of-pocket deductible.
Okay.
So what we always say is, you need to determine, should you actually use your insurance in this situation, or should you just pay out of pocket?
Yeah.
Right.
Right.
So generally speaking, if the damage is $5,000 or less, just pay out of pocket. Just pay out of pocket. It's not worth having a claim on your record. You're going to have to pay your out-of-pocket deductible anyway, which in most cases is $1,000 or more. It just doesn't make sense.
Because if you have too many claims on your home, you become uninsurable.
That's correct.
And if you go to sell your home and you've had too many claims and it's not an insurable home, that's a problem.
It is. It is.
So remember that.
It is.
Yeah. Okay.
That's it.
And it's great information. I definitely learned something. I hope you all learned. I learn every time, no matter who my guest, and I definitely learned today from Melissa. I'm going to go be exploring that umbrella insurance, because we like to host a lot of parties and have a lot of people over at our home. But anyway, I hope you appreciated the time together. Sorry again, our little technical glitches. Listen, I'm a realtor. I don't do this in my day job. I'm learning, we're trying. My whole purpose is to provide you value-added, real-time information on topics that matter as it relates to you personally, to your home, and just how to save money, make money, add value to your property. That's all I'm trying to do here. So I appreciate y'all participating and hanging in. And thank you for tuning
Diane,
in. Episode 4.
Did you want to mention anything about our giveaway?
Oh yes, we have a $50 Visa card giveaway for those who participated live, and we will be announcing our winner tomorrow. We'll do a drawing, and we'll let you know who won that card. But anyway, thanks for joining episode 4. Dishin
Thank
with
you
Diane.
guys.